Okay, so now we're continuing to plot the cycles. So here we've got another law. So we move with the price and it did a backtest. So if you look back at the backtest that we had in previous daily cycle and count the number of days, you would see something interesting about the nature of these backtests. So these things tend to be like unique to each chart. So each chart we have the way it behaves moving from a low point going towards high points. So in this case, price did a backtest. Then it had a half cycle high, then a half cycle low. Then it moved to a daily cycle high, which was reached at this point. After reaching a daily cycle high, it now moved down towards a daily cycle low. So it reached a low at this point. So here again we can draw a trend line from here through there and another one from here through there. Then we can see that price is moving and breaking the trend line like we said. So in this case here it moved below this trend line to confirm a cycle low. Then it moved back above this trend line to confirm that this was indeed a low. So you have like these crosses on charts usually as a confirmation to see that your case is still correct. Then we continue now to move to the next cycle. So it moved again, did a back test on day 12. Then we had a half cycle high, then a half cycle low. Now here price is congested, so you can't really see the swing lows or swing highs well defined. So we have a cycle low, then it tries to move up but it cannot. Then it moved to this point where we had a low point here. Now this can be tricky because we are not able to see a proper swing. So how do we check if what we are doing is correct? We can introduce a 10-day moving average. So when price comes from a cycle low, it must move above the moving average. So here we can see that price reached this low, then the next price moved above the 10-day moving average to confirm that this was a cycle low. So we can say this was a cycle low. Then it tried to move above, but it was constricted and it moved downwards. Then from there we can continue the count. So we can say this was a back test on day 7. Then it tried to move up, but it could not. Then it moved to, so this would be a half cycle high, then a half cycle low. Then it tried to move to a daily cycle high, but failed and it came down. So here you can see that once price failed to have a daily cycle high higher than this point, it was more like a confirmation that this chart might struggle for it to get back above the recent highs. Usually you would expect a chart to reach a peak maybe in daily cycle 3 or maybe 4, but in this case it quickly turned bearish. So if someone was in Sasso and the moment they see this high is not able to go above here, they could probably maybe sell and look to buy something else. Then from that time, let's just see the number of days. Then from that time to this point here, you can see it was 129 days. So for 129 days, Sasso didn't do anything. So your money was better off invested elsewhere and be able to earn maybe 10, 20, 30%. So this is how we use cycles to tell when to buy, when to sell. So in this case, you can see we had 1, 2, 3, 4, 5. So we have 5 daily cycles within this chart. So if I change it to a weekly chart, I'm going to look for those places I have been marking. So here you can see that we had price moving upwards and it reached a peak in this week, then it moved downwards. So here we can say this was a weekly cycle low and a weekly cycle high. Then you can say this was a half cycle high of a weekly cycle, a half cycle low of a weekly cycle. Then we have the weekly cycle low, which is what we call now the ICL. So this is ICL to ICL, whereby Sasol took 5 daily cycles to reach that point. So for now we can stop here and digest how we can now see clearly that price has moved from low to high, then to low again. So in the next episode we analyze the other part after we reached this point. Thank you.